Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Hump Day, Hump Day, Hump Day, January 15th. We got just a couple economic news releases, but they are some big ones, so high impact ones. We'll start off with the Producer Price Index. This is the inflationary numbers for the wholesale division. So it's not the overall huge impact, but primarily because even though prices go up on the wholesale side, it doesn't always get passed on to the consumer, and that's really what we're looking for in terms of inflation. So that will be coming out tomorrow. The CPI report will be coming out tomorrow, but it does give us indication is maybe any reasons why the CPI might, if it comes in higher, why it might come in higher or lower, versus, in either case. So in November we had a negative, a pullback at a 0.1%. And forecast for this month was actually supposed to go up 0.4%, and it came in at forecast, so a pretty big jump there. But if you strip out the food and energy, which creates a lot of the volatility, you got the core PPI for the month of December, and we had a 0.1% increase in the month of November, and the forecast is supposed to maintain that. And it jumped up to 0.3%. So we had a lot higher inflation numbers than forecast, obviously. So it's something to keep an eye on, especially tomorrow. We'll see if the CPI reports. We've been kind of reporting lately, over the past year, that there's a lot of concern about inflation. We need more inflation, and a lot of forecasters or economists are basically saying that the economy needs to grow a lot faster to be able to bring the inflation rate to a more of a healthy level. The Fed likes to see it right around the 2% range. So once we start going above that, that's when you start seeing them raise interest rates to stave off inflation a little bit. But right now we're way below that. We're hovering right around the 1% range. Also, we got the Empire State Index. This is the manufacturing region for New York. So we had a 2.2 in December. The forecast is supposed to increase to 4, and it jumped up to 12.5. So the highest rating we've seen in manufacturing in the New York region since 2012. Now, this is important because the last couple of months we've been seeing some poor readings in the New York region. So this spike is actually some good news and kind of a pleasant surprise. And last but not least, about 11 o'clock Pacific Standard Time, we'll get the Fed Beige Book. It'll give us some inclinations as to the Fed's thoughts about their last meeting and kind of talk about where they're give us some clues as to what they are looking at in terms of their tapering and such. So let's go ahead and take a look at the headline news. So with the good news, especially on the Empire State Index, the stock market's up. There's also some corporate earnings reports they're looking at, like Apple did well, Bank of America did well. So their stock market's kind of taking off a little bit this morning. And also later today, we have some Fed speakers speaking later on today that could create some more volatility. The Fed Beige Book definitely could. That's going to be, again, reported at 11 a.m. Pacific Standard Time. And then also any words from any insight as to the thought process with the continuation of the tapering on there. So, all right, so let's go ahead and take a look at the bond market, see what interest rates are doing. So as fast as we went up, we're kind of coming down, but today we got a pretty huge opening gap, so we need to hopefully close that here shortly. But if you look at where we left off, we were about 100.6 on Monday, and since then we're down to 99.94, so we're down about 70 basis points. Nearly 70 basis points from where we left off on Monday. That translates to almost 3/4 of a point in fees in pricing from Monday. So we got hopefully we'll get a little bit of a spike here. But again, the news later on, we could potentially close that gap. If you could see from Friday and Monday, Thursday and Friday last week, we also had a bit of a gap. So we could close that gap before we can actually have a nice stable run upwards again. Now, again, my projection is we might have a few ups and downs in process, but I think we can reach levels of about the mid 101 level range before we taper off and correct again. All right, folks, thanks for watching. Rates did climb up a little bit so far today. And even yesterday, as you could see. And stay tuned. Tomorrow's CPI reports and also the Philly Fed. So we'll see the manufacturing Philadelphia tomorrow, and those will also be high impact market movers tomorrow. Thanks for watching. You guys have a great day, and we'll see you tomorrow.